We do this every single week on Wednesday. It's 8:30 Mountain Time here in colorful Colorado. That is 7:30 if you're on the West Coast, 10:30 on the East Coast, and that would be 9:30 if you're in beautiful Chicago or Texas. So, how's everybody doing today? Our topic is going to be the power of mid-year financials. Now we have gotten far enough into July that you should have your financial statements from the first 6 months, January through June. Chances are that you should be at least reviewing your three major financial statements, what I like to call the Holy Trinity. Those are, of course, your profit and loss statement, your balance sheet, and your statement of cash flows. I would highly recommend that you are taking a look at your profit and loss to date from the beginning of the calendar year, which for hopefully everyone that I'm speaking to is also your tax year. Over 95% of businesses do use the January 1st through December 31st tax year, though there are two other ways that you can actually account for your tax year. One is fiscal, being that your year begins on the first day of another month other than January. And there's also a 52-53 week. I recommend against both, particularly if you're married. Basically, you have to drag your spouse into your world if you do anything but calendar year. And as a medical professional, there's no reason for you to do that. Honestly, people need medicine 12 months out of the year. It's not a seasonal profession. So I kind of got off on a little tangent there. Let's talk about mid-year financials. So the first half of the year ended on June 30th, and the second half begins July 1st. And I kind of like the fact that we've got a very important national holiday in the very first week of the second half. That sort of marks a time where we're moving forward with the second half of our goals that we hopefully have created for ourselves back near the end of the previous year. And we have an opportunity here to take a look at our financials and ensure that we are making good decisions based on hard data. Now, of course, and let me go ahead and get this done here. Like I say, your financial report should have a P&L for the period of January through June. And then after that, you can take a look, and if you are based on estimations, assuming that you don't have any aspirations to grow or scale your business any larger, which hopefully is not the case, but in any event, at least you are able to estimate exactly what the remainder of your year looks like by a simple multiplication factor of 2. 6 months down, 6 months to go. So one of the things that I want to emphasize here is the power of estimated tax payments. Now, we know if you are making your payments that you've already done one on June 15th. Second quarter for estimated tax payments is actually offset by a month. And you may ask yourself here at this point, why then is it important to take a look at mid-year financials? I'm going to get into a very good reason why. The second half, I believe, is critically important relative to the first half in terms of estimated tax payments, because you have a real opportunity here to make good estimates based on actual data and move through the remainder of the year by looking at your personal estimated tax payments as a monthly event. So what you can do is sit down and figure out your tax for the year based on that factor of 2. You have your your estimate for your annual income at that point. Figure the tax, divide by 2, and that, of course, is your estimated tax for the year. Now, if you subtract the amounts that you've already paid in April and June, and hopefully you've done this, and then divide the remainder by 6, consider setting aside an amount each month in a dedicated no other purpose tax savings account. Any good online bank will allow you to create additional bank accounts. Hopefully, as a matter of fact, if you're using a bank that charges a monthly or annual fee, it's time to reconsider your bank, because you really don't need to do that. There are plenty of very good banks that don't charge anything for having a checking account or else saving money with them. So, in my case, we have a number of different bank accounts, and one of them is labeled tax savings, and that's all that's used for. If you do go on to the IRS Direct Pay website to make your estimated payments, April, June, and remember the other two are September and the middle of January the following year, you go to IRS Direct Pay, and one of the options it will allow you is ACH savings. So you can pay directly out of that savings account. There should only be 16 transactions in that account in a year, 12 deposits, and 4 withdrawals. Sounds pretty simple, right? And of course, you do want to make adjustments if you have a sudden downturn, or if you're have a sudden upswing in business as well. Do tweak and otherwise take a look at your estimates accordingly. But what we're trying to give you as a takeaway here is that mid-year financials give you the opportunity to actually develop the habit of putting aside your tax money monthly and not just scraping it together for each of the deadlines. In this way, you are basically matching the tax expense that you know you're going to have anyway to the month that you're making the money in. And basically, it's like keeping a bedroom neat in your mind, if you will. So this is definitely a fiscal habit worth developing. So if you have any questions about that, or questions about, excuse me, so sorry, how we help businesses to not only survive, but to thrive and actually grow and scale your medical practices, then please reach out. We're on any one of the 3 social media that we're using currently to broadcast this to. We are on Facebook and YouTube, as well as LinkedIn, of course. And all you have to do is pop a note into the comments. If you have a question, we'll read it aloud next week on that week's weekly profit talk. And remember, we do this every single Wednesday at 8:30 a.m. Mountain Time, 7:30 LA, 9:30 Chicago, and 10:30 New York. So if you have any questions, please let us know. And hopefully you develop this very good habit of setting aside taxes on a monthly basis. And by doing this, remember, the reason why we make good estimated tax payments is because you don't want to be caught next tax season owing quite a bit of money. There are also underpayment penalties. So there's not only that that sinking, dropping feeling in your stomach of suddenly having to spend a bunch of money just to pay tax, but also you actually have to pay more if you haven't been paying as you go. So 2 very good reasons. So with that, we hope this is helpful. And I hope that you have an amazing rest of the day, an awesome weekend. And if you do have a chance, do something randomly kind for a stranger today. So with that, thank you so much for your time. And